Okay, hello guys, welcome back to my favorite channel. Right now, I want to say about support and resistance lines combined. Fibonacci corrections and extensions are profitable standalone trading solutions and are even more profitable when combined with each other. In these sections, we want to add support and resistance lines. If we believe that chart patterns reflect investor behavior, it is reasonable to attach high importance to peak or valley configurations, especially for drawing support and resistance lines. Support and resistance lines combined with Fibonacci extensions in the previous sections. We discussed approaches to calculating valid turning points in the markets by combining Fibonacci corrections and extensions. In figure 6.19, we showed support and resistance lines in combinations with price extensions on an S&P 500 index sample. The extensions levels are the same as the ones shown in figure 6.15. Combining support and resistance lines with Fibonacci extensions maps the S&P 500 index well and provides useful information on where the market will find resistance levels in the future. 5 price targets and clusters show up. First, a price target at 938 points in the S&P 500 index. Second, a target band between 963 and 974 points. Third, a price band from 1022 to 1052 points. Fourth, a price band from 1085 to 1088 points. And finally, a cluster between 1158 and 1166 points. Again, we do not know what the S&P 500 index will do in the near future and whether some of the pre-calculated price levels will ever be reached. We are only saying that if one of these levels is reached, market pricing might have a difficult moving through it without any corrections. Support and resistance lines identifying trend change in addition to projecting price targets as shown on the S&P 500 index. It is interesting to analyze how important support and resistance lines are as trading tools and whether they give enough information to identify trends reversal in selected products. To explain what we are looking for, we start with some graphs that explain the concept, which is based on the notion that markets rotate. The typical pattern is that support lines become resistance lines and resistance lines become support lines. In our analysis, we refer back to the very beginning of the book, where we explained why we are looking for the magic number 3 in our analysis of trend change. The 4 little graphics with basic support and resistance pattern in figure 6 20 have the following meanings. We only look for support or resistance lines that are horizontal connections of peak and valleys. A peak is valid if it has lower heights on either side of the highest height. A valley is valid if we find higher low on either side of the lowest low. For a long trend change, see top left graph in figure 620. Viewers need a valley and a peak to determine the trend line. We need a second peak above the trend line to be broken to confirm the trend change. For a short trend change, see top right graph in figure 620. We first need a peak and a valley to determine the trend line. Until the first part today, friends. See you in the next video. Bye bye bye.